Welcome back. I'm joined by leading analyst Zach Meir. Zach, piece in the Mail at the weekend highlighting the hedge funds shorting a number of stocks, 10 in total, 2 videos. Let's kick off with the first one, Carillion. The headlines, the bets paid off from notorious hedge funds such as Marshall Wace, Thunderbird Partners and Immersion Capital, all reaped the rewards as they cashed in on the short positions as a general headline. What's the chart telling you? All over?
Well, I think the chart was telling us, actually before, you've got the previous, what's actually a falling wedge, it was a bullish formation there on the chart. But obviously with the announcement from the company that all is not well, that charting configuration went out the window. I think here, obviously with the benefit, well, it's not even the benefit, it was known as being the most shorted stock on the London Stock Exchange.
Yep, so 28%.
So you didn't need to be George Soros to work out that things were not looking very good. The only difference is, or the only thing there, which I found strange, is if things were that bad, i.e. hedge funds were shorting the stock to death, why was the company not saying whatever was going on earlier?
Yep, fair point. Let's move on to Ocado. Shorts here 19.5%.
Right here, I mean, you've actually got the stock no worse than sideways over recent months. So what is it, sort of 250 to 350 in the recent past? So really, all you've got on that is, I mean, if you didn't know anything about the shorting, you'd probably say this is a stock which is a buy on dips. So what do the hedge funds know? What do the bears know on this one?
We don't. Okay, let's move on to Morrisons, 16%.
This situation, I mean, I think you really wouldn't see or wouldn't think this is a bearish situation in any way. I mean, we had the stock gapping through the 50-day moving average at the end of 2015, gapping up again. It's gapping up, then it's consolidating, gapping up. So I don't see, you can't see at all from that chart why anybody would be short at all. I mean, there's just nothing there.
Understood. Zach, let's move on to Wood Group. Got 12% of the shares short.
This is a bit more logical in terms of a bear situation. Always look for gaps to the downside, which start off a bear run. So that happened as long ago as February. Fill the gap and then down again, which is a classic technical sell can set up. Situation here, really probably be looking for the stock to retest the sub 550 pence area, which is where it was a year and a half ago.
Understood. And finally, in this segment, let's go to Tullow Oil. Again, 12%.
Stock which has hit people very hard over the recent past. Shares, down from what £3 at the beginning of the year, so they're basically halved. If there is that short interest there, that would probably stop you looking for a recovery. You'd be looking to sell into strength, maybe up to the 50-day average at £1.68.
Thank you very much indeed.